Stop! Before you buy your property in a family trust, you must consider the land tax on property. We've had a number of clients join us with a huge land tax bill due to investing in the wrong property structure. You could be paying tens of thousands of dollars extra a year due to one slight easy mistake. Do not confuse land tax with income tax or capital gains tax. It's completely different. Land tax is taxed differently from federal tax, which is income tax or capital gains tax. It's actually taxed by the states of Australia, which means that there are different types of taxes for land tax specifically for your state that you live in. So what is land tax? Land tax is a tax levied each year on the property you own that is above the land tax-free threshold. Land tax is generally payable on unimproved value of the land that investors own and applies regardless of whether income is earned from the land. The land's unimproved value is the value of the land without taking into account any improvements on the land such as your building, landscaping, paths, and fences. You'll likely have to pay land tax if you own or jointly own vacant land, including a rural land, and land where there's a house built on it. As investors, you'll probably pay land tax on your investment property too. Land tax is also levied on company title units, residential, commercial, or industrial units. Commercial properties like factories, shops, and warehouses, and on land leased from the state or local government. Okay, so if you fall into one of these categories, this video is for you. So please stick around. Let's have a look at how land tax is calculated. Land tax is calculated on the total value of all your taxable land above the land tax threshold, not on each individual property. For example, if you own two properties with the unimproved land value of each individual property amounting to $300,000 and $220,000, then you'll be liable to pay land tax on the total value of $520,000. If the combined value of your land does not exceed the threshold, no land tax is payable. Each state government website generally has an easy-to-use land tax calculator, so make sure to check them out. We've left a link in our bio that will take you to our land tax guide. You can find all the government land tax links in the article. The amount of the land tax payable is dependent on whether it's an individual paying land tax or whether it's a company or a trust and the land tax-free threshold of each state or territory. For the purposes of this video, we're going to have a look at the state thresholds for an individual paying land tax in New South Wales, Victoria, and the Northern Territory. In New South Wales, land tax is calculated on the total value of your land tax assessment above the threshold. You can see from this table that the general land tax threshold for 2021 is $755,000 and the premium land tax threshold is $4,616,000. You'll pay $100 in land tax plus 1.6% of the land value above the threshold up to the premium threshold for the general properties. For premium properties, you'll pay $60,164 in land tax plus 2% of the land value above the premium threshold. So if Kim bought an investment property in Sydney in 2020 for $1.4 million, she'll pay $100 plus 1.6% of $645,000, which is the difference between 1.4 mil minus $755,000, which is the threshold. That would total to $10,420. And if Leo purchased a holiday house in January 2021 in Byron Bay for $4.8 million, he would pay $60,164 plus 2% of $184,000, which is the difference between 4.8 mil minus 4.616. That would total $63,844. These amounts will be payable after the 31st of December, but accessible on the 31st of December. The land tax calculation is a little bit different in Victoria. Instead of the set amount with an additional percentage for any value above the threshold, the Victorian government calculates land tax according to the property's taxable value. If you have a look at this table, you'll see that if your property costs you less than $250,000, you won't have to pay any land tax. But if your property value is $600,000 to $1 million, then you'll pay $975 plus 0.5% of the amount more than 600K. So, if Emily purchases a 3-bedroom investment property in Melbourne and it costs her $795,000, then she would have to pay 0.5% on the $195,000. The amount more than 600K plus $975. On the 31st of December each year, Emily will have to pay a total of $1,950 in land tax. If you live in the Northern Territory, you're one of the lucky ones. The Northern Territory is the only territory or state that doesn't require property investors to pay land tax. So make sure to check out our ultimate guide to land tax to see the threshold amounts and the land tax payable rates for other states and territories. The link is in my bio, or you can probably check it out here. Now, we've had a look at how land tax works for individual property owners, but how does it work with companies and other types of organizations like a trust? Well, a company is generally assessed in the same way as an individual. However, some states and territories have certain specific requirements that others don't. For example, in New South Wales, Tasmania, and Victoria, a company is assessed in the same way as an individual unless it's related to another company. So make sure that you visit the relevant state or territory's government website for the rates applicable to companies and related companies. It works a bit differently with trusts. A trust is an arrangement where a trustee manages or holds property for the benefit of one or more individuals or organizations, known as the beneficiary. When calculating your land tax liability, you must consider the value of your interest in the account. A trust may be liable for land tax. Make sure you visit the relevant state or territory's government website for the rates applicable to trusts. You may be able to reduce the amount you pay by claiming the land tax threshold depending on the type of trust. If you're thinking of purchasing a property through your trust, you must review the land tax rules of the state that you're purchasing in. For example, in New South Wales, special trusts such as family trusts don't have the land tax free threshold. This means that you could be subject to a significant large land tax bill. So it's worth investigating all your options and speaking to an expert. If you've been advised or thinking of buying your property in a trust, stop and review the land tax implications first. Let me give you an example of why. Say you want to buy a $1 million investment property in New South Wales. Land values at $1 million. If you purchase this in your personal name, you would get the land tax free threshold of $755,000 and pay roughly about $4,020 in land tax per year. If you decided, on the other hand, to buy in a family trust, then you lose the land tax free threshold and you could pay $16,100 per year in land tax. Just one slight mistake, it will cost you 4 times in land taxes per year. So be very careful with buying property in family trusts. And I'm not saying family trusts are not good for property. I just want you to be aware of the land tax implications. Okay, so now that you have an idea on how much land tax could cost you, I'm sure you're wondering if there are any exemptions that you can claim. Depending on the land ownership and use, you may be eligible for a land tax exemption. So for example, if the property in the land is your principal place of residence, generally it's exempt in all states and territories that require you to pay land tax. In other words, you won't have to pay land tax on your home that you live in. However, if you own a property in a trust or a company, you can't claim this exemption, obviously. Again, each state has its own rules for land tax exemptions. So for the purpose of this video, we'll look at the exemptions for New South Wales and Victoria. In New South Wales, you'll be exempt from paying land tax if the land is used for primary production. For example, dairy farms. You also won't have to pay land tax if the property is used as a boarding house or if the property offers low-cost accommodation. So caravan parks, non-profit organizations, and retirement villages are also exempt from land tax. And lastly, you won't have to pay land tax if you run a childcare center, aged care center, or nursing home on the land as well. In Victoria, land tax exemptions relate to Crown land and public land. If the land is used by a non-profit organization for sporting activities and other outdoor activities, then you won't be liable to pay land tax. Other exemptions relate to healthcare centers, care facilities, retirement villages, caravan parks, mines, and agricultural farms as well for Victoria. Before I finish off, I wanted to just share 4 more tips with you for reducing your land tax payable. Number 1, purchase the property in the name of a person who has not already hit the threshold in the state. A good example of this is when a couple decides to purchase investment properties. For example, the husband might already have a property in his name, hitting the threshold. Therefore, he might consider acquiring any more properties in his wife's name rather than his. Number 2, use fixed trusts in other entities to split up the threshold. The use of a fixed trust can allow you to essentially have multiple thresholds. However, before you invest, make sure to chat to a tax agent to find out the tax situation surrounding the property. Number 3, invest in more than one state. Don't put all your eggs in one basket. Spread it out in your properties across different states. You will accumulate less land tax because you've spread the value of the land or property across several different thresholds. And lastly, buy properties with lower land values. Generally speaking, apartments tend to have a lower land mass compared to houses. It could be that you could own a few apartments before ever getting near that threshold for that state. Make sure to chat to a tax agent about land tax. You don't want to get a nasty surprise when it comes to taxes, especially if there are ways you could have reduced it. If you're interested to learn more about tax deductions and any other tax-related content, head over to our YouTube channel and click subscribe. See you next time.